28th edition of Invest Data Trading Academy live with Ambrose. Yes, I'll tell you that the global market is trending southward as we speak. And we are not surprised that Nigeria market is also looking southward for creating opportunity for design investor. And for me, there's a coincidence in the global market and what is happening in Nigeria today. And also, if you look at the concerns about what is happening globally and also what is happening in our economy today in Nigeria, that will reflect the sentiment we have seen in the market. But for design investors and smart traders, you should know that this is the time to take opportunity of pullbacks. And that is why today's topic on our discussion is that yes, we want to look at the key, the keys to trading pullbacks in the market. And before we go that, is the trading ties bull run in the market, is it come to an end in our market today? We will say no, and this is an opportunity because no market anywhere in the world remain in the green or also remain in the red. What you are seeing is part and parcel of market dynamics. Any market, anywhere in the world has the uptime and the downtime, and that's why when I said that that the global market is extending, the downtrend or what we call a trend lower, anything you want to call it, tell you that it is not only Nigeria was saying this. After most of the market players have seen that the trend in the market is changing, and that will say that generally I would target that there is what we call repricing and valuation in focus in any market, and that is why in this hour Nigeria Stock Exchange is also facing modern repricing and valuation as we speak. Even when there's a coincidence between the threat from Trump and at the same time looking at the plan to start implementing the capital gain from next year, all these are kind of jittering most of the investors in the market as we speak. For you and I that are an investor, it's time for you to look at those stocks that has value that they pull back an opportunity for you to buy because I tell you the earnings that are released recently have reviewed those stocks that has what value for you that will impact their price, that will impact their what their payout. That means if you're looking for a dividend paying stock at this end of October, you have seen how the market have rallied for straight 7 months. Now that we are seeing this kind of correction, it's not the time to panic, but rather not the right time to jump into stocks. And that's why before now we have not taught investors how to trade pullbacks and another pullbacks here in the market. It's not time for you to just start running enter scatter, but rather for you to buy into value as usually preached in this platform. Let's go back to what is happening in global trend. I tell you that it's not in Nigeria we're seeing a downtrend or a pullback. I tell you that the global stocks market or equity market around the world are looking up southward at this moment. And that is why we're starting from Asia to see what is happening in Asia market. I'll tell you that Asia market has opened mid trading on a sharp decline, reflecting what is happening majorly in Japan and South Korea, leading the losses because of what investors reacting to the sell-off they saw in Wall Street overnight yesterday. Even when I was also sitting down at home yesterday, I saw the sell-off in US market. It sent a signal, even because the kind of I'm glad to put it now, have done of China and the US on this their trade war or tariff. These are the things that also opened, and also most of the companies in US market has also released a missed number, and that's also part of it. But I will tell you that in Asia to speak now, I will tell you that fear of what of or concern over stretched valuation in US market is also affecting stocks in Asia. Even as we speak now, South Korea is down by what by 4.5% in the red, followed by Japan 4.1. I mean Japan, talking of Japan Nikkei 225 index down by 4.4%, driven by what decline in tech stocks. Also in Asia, because of tech stocks, don't forget that these tech stocks have more impact on their indices. Because of these tech stocks are declining, it's already reflecting on the index, and also that has sent also a signal to what is happening globally in the market. And that also, as also, don't forget that in the outcome of a Fed meeting on rate cut, yes, they want to cut rate. I'll tell you that there is some Fed news uncertainties, trade cautions weighing on every market across the globe. Even as we speak now, China blue chip index is down by 0.6. And that of Hong Kong is also down by what 1.2%. You can see that it is not just a Nigeria thing, it's a global thing, it's not just Africa thing. But one good thing is that in any market, No, I said anytime, any day, anywhere that no market remain up or no market remain down. The dynamics of stock market that market has to go up and come down, and that's the beauty of what investment. You buy low, you sell high, and that is how every investor should think. Now that I see that stocks are pulling back in this in this global market and also in your own domain. Or you take advantage of those stocks that have value, that yet it is not because the companies are posting no negative number, it's not because the economic numbers are negative or there's war in that economy and stock are coming down. That means it's not. But that's why for those that know how to create wealth, this is how to invest. When you see stock pulling back, you start investing in value. And for me, that is why I say you should not panic at this time. Let's look at what is happening in Europe. After that, Europe also have followed the trend of a global trend down, or as most of the companies there also announcing job cuts. That is what we are seeing in Europe. That means Europe is adding to what the global sell-off. Also another busy day of earnings season in that market in Europe. But I'll tell you that yes, as we speak now, that the major indices in Europe market are down, especially the ADS index in Germany is down by 0.6%, followed by that of a CFA 40 in France. It's also dropped by 0.4, and that of UK, which is a FTSE 100 is down by also 0.2. You can see that tech related weakness are weighed on this market globally, and for me, it's an opportunity for to look at also that tech side, because the AI related stocks that has potential already. There's a forecast that 5 years to come, AI will dominate every facet of operation in the world, and that industry has a lot of food benefit or food potential to move forward in terms of price. That means in our local market, which are the tech companies that that have potential to move forward, these are where you put your money as we speak now, and that is the only way you can stay ahead of any market in another of information and where the market is heading to. And that if we see that both the Asia market and US all have been kind of influenced or by sell-off in tech company, so that investors should also prepare to take advantage of that pullback, to also revalue these companies and also position ahead of the full year. Don't forget that we're already approaching the end of the year, where many companies that has the same calendar year of fiscal year from January to December, releasing their full year result at the end of the day. It is time for you now to start positioning those companies, because by end of December, early January, you start seeing the companies releasing number, and dividend start coming, rewards start coming for shareholders. And this is the time we are seeing the third quarter of most of these companies are giving you insight what the companies are capable of doing in terms of dividend payout. Not for that price feed on earnings, and also how benefit is given to what shareholder. That means if you are seeing a company doing better than expected, and you are seeing strong numbers, if that will support their payout at the end of the day, this is the right time for you to key into those companies as we speak. Yet also, like I've said, companies that are in Europe are also looking down, but also I see that yes, in Germany we are seeing that the car maker, BMW also have boosted its profit, which is also good news. The quarter result was very, very important. I mean, the third quarter result of BMW result that came in Germany car maker is also very good. Even also the further cost research and the development spending. But I'll tell you, on their electronic vehicles, we are seeing also while banking also banking also on their new electronic series to boost growth, and also even when they have a stiff competition in China and also in US. I'll tell you, Germany is a set because of the electric car has come to stay, and that is what is moving now. I believe that most car manufacturing or makers of cars are also looking that way to take advantage of that new development of what taking less of fuel, less of gas, and going into battery cars, which was electric car charging. For me, it's a good one. For them, yeah, we see also the cement healthcare also cut earnings forecast for 2026. Also, that's also due to what tariff and also currency effect. These are going on what on this German medical technology group. Also, despite the growth in their revenue by 5 to 6% in their recent results. But see that the Max and Splendor also dropped their profit, half-yearly profit drop also, and saying also second for weak retail consumption. And also don't forget also that Germany is one of the biggest economy in Europe. I was seeing that their industrial order has improved. There's an increase there in their increasing to what to increasing in September by 1.1% on the previous month, recovering from what? From a drop we recorded in the previous month. The previous before this one, 0.1, 0.4. That is an improvement, and that don't forget also that in the last MPCM policy meeting in Europe, we saw that yes, that the European Central Bank, policymakers, try to keep rates unchanged, and that's expected, and also a good one to see what are the December and the New Year will bring before another meeting comes up. Yes, despite all the move by US to drop the price of crude oil, to speak now, crude oil price is still trending, right? Drop marginally to around the 64.40 dollar per a barrel. And after you have seen 2 weeks low previously, we have seen that it's stabilizing, and this has result of what increased increase the inventory in what in US that sparked what fear of sluggish demand across the globe. Even when OPEC also is also trying also to increase what output at the end of the day. Yet, if you look at what is happening in US market, the US market is open missed this morning as sentiment also remains mixed as the major average indices in US are also searching for direction after the previous session sell-off over what over sustainable of a high sky stock valuation. You can see that the valuation has become a major focus in this market. Now most of the stocks are what are overpriced, and that also because their earnings are also supported. But if you come to Nigeria, I'll tell you that the P ratio of most of the markets here are still below what are still below 10. For me, it's a good news for one. Despite most of our stocks also are move up, these are the things that we consider. Come back to what is happening in Africa. Africa market is mixed, but I think that Nigeria market is flat as to speak now, and that is one thing that we should pay attention because this is where we make our own money. Let's look at what is happening in Nigeria market. I will tell you that the market data is even that yes, we are having more sellers in the market than buyers, which I said at the opening that we'll be looking at the keys to trading world, to trading pullbacks in our market. Our market has pulled back already, and that is an opportunity for you to say. If you look at the chart that's been displayed on this discussion, you can see the movement. But here we are seeing today the market is flat. Let's see, but the only thing is that we are seeing more sellers in the market than buyers. But the good thing is that the volume that we are seeing now is gradually coming up. But today volume is very small. I believe that in Nigeria market, the pullback we are seeing, like I said it at the beginning, that it's a coincidence that we are seeing this pullback like this. Already, yes, repricing and valuation in focus on the NGX as we speak now, and means market players understanding or kind of understanding the recent earnings that were released to the market that coincide with what with preparation of government to start implementing, as I said earlier, capital gain tax, implementation, and also military threat of the US on Nigeria due to war, due to government failure to protect its own people. It put it in the face of continuous killing, kidnapping here and there. But I believe that yes, our government is taking this as serious to look inward and see how they can put measures so that it will not affect our economy. It's not also going to affect our relationship with US. I believe that it's a wake-up call for the government. It's not a threat then, but say sit up and say if you fail, that's where the language that we use. But also because concern of foreign investors always that. But I will tell you that our market has survived before now without foreign investors, and I believe that if government is thinking of making that they sustain this momentum and also the target of achieving a $1 trillion economy, I think the capital gain at this time should be suspended because the timing is wrong. Well, as we speak now, Nigeria market generally is below $1 trillion in terms of value. As we speak now, our market value is about $68 billion, while that of South Africa is about $1.6 trillion. You can see, and we say we are the giant of Africa, we go nowhere. I think it's an opportunity for us to encourage inflows into our economy with reforms that government is doing, and also we are seeing that the monetary policy has already taken a move to cut rate in the previous meeting, which was expected in this month of November. Yes, if the market are branding have stronger indicators and we have weak indicators, it tells you that we must government must look inward to see that they will not be the one that will deflate the market and the economy with their policy. Timing is very, very important when it comes to policy implementation. I believe that the idea of taking off capital gain this time would not be especially at this time we are seeing that this call is coming from the Western world in terms of Trump trade. At the same time, implementation, all these have sent negative sentiment to the market. Don't forget that this is the only market that has sustained this economy, and also since this government came on board, the market has speak more impact of their volume, impact of their reform. But I believe that it's time for them to look inward that the timing of that's implementation, especially the capital gain, for me, it's also not the right time. And also the 30% seems to be also on the high side. I think we can start from even the 10 that was suspended before, gradually with the level of compliance, we can now kind of move up with that. I think these are the things that send them up. I believe that since it is not the economic reduced pullback, it is not the poor earnings performance. Yes, we know that liquidity is the key of any market. But I believe that the financial market of Nigeria also is robust with the recent recapitalization of the banks, and also insurance companies are also going through recapitalization. This will provide liquidity. Yes, no foreign investor is needed, but out there that when they decide to go away from our market, from 2020 when we had the COVID-19 issue, I told you that they were out of this market, but institutional investors in Nigeria carried the market to where it is before they start coming back again. But we have seen new correction in the market. Also, we have seen new level of performance in the company or the exchange. I think that is for all, it is a good news. And I believe that this pullback is an opportunity for you to buy into value, especially after you have seen the Q3 number that have reviewed where the company is going, and most of these numbers have indicated that this company has surpassed even what they do for what they did in full year 2024 with their Q3 number. That will guide you and also help us to move forward in our investment in Nigeria. Back to market data, I'll tell you that as we speak now, we're having a 25 decliner and also 8 losers. And the market is ranging right to speak between 152,530.7 to 152,742.77. Meaning that market is flat, trading at what 152,729.60. Market is flat, gaining 0.02 plus. That is a flat market. As you can equally see it in the chart here, you can see that we're having a flat market here at this moment. But for me, we'll go back to see how we can trade pullback as we know as our topic for today. And before we can go inside trader to trade pullback, I want to bring out indicators we're going to use to work. Let's go straight to our indicators that will help us to look at the momentum in the market and how we can catch all this pullback. If the market consolidating, if the market trying to rebound, all this has to be at the back of your mind, and that is the only way you can stay ahead of this market. We call our MACD, we call our moving average exponential, also call our money flow. But I'll tell you the key ways you can also trade pullbacks and what I've mentioned, and I'll tell you that if you look at the market as we speak now, because the market tried to resist decline, and even though it is slightly below the T line, we'll change the T line to our normal 8 days moving average exponential. You can see that exponential. Let's change it to 8 as usual. Good. You can see that if you look at now, it's likely that the market is below the T line, sign of weakness. Also, you can see on a daily chart that the MACD is already bearish, and money flow is looking at 64, not below what the market right now. But if you look at the way the market is going, market is already, look at what we call a rubber band. The rubber band, the indicator that we use to time the market is already entering at its oversold region. That is a sign. That means for those companies that you want to pay attention to, you must look at now that market is pulling back. You need to wait to see to confirm a strong support level for you to buy. Is the time that you must apply your resistance and your support level to know the key value, the value area of this market, and that is part of the thing we're going to discuss. Once you to consider the key value area, you're able to know when to take what or to take action. If you look at this chart that's been displayed now, we want to look at where is the resistance level and where the support level as to speak. If you look at this level now, at this peak where we are seeing where my cursor is now, let me quickly bring. Let me take let's do trend line here. Let's also take another trend line here. Yeah, if you look at here, you see the market is still coming down level. Another strong trend line I will put here is here. I'm looking at the strong support level. Should put attention is here 51,294. Yes, I'll leave it there. At that point, you can see that market from here to here, get to here, start coming down. But it has not touched, it has broken down the tree line, which is here, serving as what as a momentum to tell you what is happening. Is the market weak or market strong? But look at where I drew this support level between this green line and down line is called the value area. You want to check will the market break out this the support level that I drew here. Will it break it down? Looking at what this index action, then it will it also go up here. We want to see because I believe that as the market is going down, there are going to be attraction. But I believe that fully that at the end of second to the third week of November, we want to see a rebound in the market because we have seen the kind of earnings that we have come to the market. Now that we are seeing this movement here, it's now done on us to know what to do. That's why this class is ongoing to see that we check where the market is going. And this for the index, resistance level and your support level to know the value level and your support level to know the value area or the position where you are going. And also is what is the market is it moving on where you are going. And also is what is the market is it moving down because I can tell you that you don't catch a falling you don't catch a falling knife because if you catch a falling knife you are at risk. Market is trending down. Is it the right time for you to jump into the market right now or is it time for you to go on and take the right decision or you're waiting? Because yes, the strategy of averaging down is good, but how long will the market will go down is very, very important, and that's why you must pay attention to it because you must know the right price to buy into stock so that you're able to take the right value that you want. Now that we are looking at the index, you have to pay attention where is the index going from here. If you're able to get that direction that where the index is going from here, that it becomes easier for you to make what to see exactly the trend that the market is also going. Once you're able to take that trend, it helps you all to make decision on what to do as traders or investor because you are in the market to make money and that will help us also to know exactly what we are doing right there in the market because once we're able to know exactly the direction of the market and able to buy at the right time, then you are in forward. You don't jump into a stock that is still making what a start movement, or rather you buy into stock that has all it takes for you to also to make money. And that's why you must play a clear direction where the trend is going. That's why I said that value area is very, very important for you and I to know exactly where to what to jump in because identifying the overall market direction is very, very important. And put looking at this index that measure the volatility market will tell you where the market is going. Is the market making lower low? Then after you identify that you can now use different time frame to determine the primary direction and also the secondary direction using your trend line to draw to see or looking at your moving average or like we have used our T line here to confirm if the trend is up or down. As a student, I think that the trend is marginal and weak because it's above them. You must know that. And also, you define the criteria of the pullback you want to do is very, very pushback, I want to resistance and support level I told you is very, very key. What percentage of retracement I want to? That's why also Fibonacci and also it's very, very important to also come here to confirm was with this technical confirmation it will help you to know the pattern of the movement using your technical indicators and chart pattern to confirm that the pullback is ending and that's where you can join the block. As I speak now, say that what is happening is coincident in the market. And for that, you should not just panic out of good stuff that have value because those stocks are the ones that rebound first. Rather instead of panicking out and coming back, you exercise patience and also if you have cash, keep your cash to see when you get at the right time to jump in, quickly jump into that position because that is the only way to make money in this market. But when you are trading and you want to confirm, use your support level and resistance on the part of your trend line is what you're going to watch to see if whether it will bounce above or below of it. Already I've drawn another support, break it out or not. That is also you need to pay attention in. Trend line also you also want to draw from here to here. You can see that market have breaking the up trend line already. The bullish channels have been broken down, or rather market has been on a bearish channel right now. On a bear channel coming down now. You want to draw here and here because market have broken down the bullish channel as we speak. These are the things that will help you as a trader or investor to know exactly what you are doing. Like I said, because of the dynamics of the support and resistance, Yes, you can also take some moving average to guide you as key. You can use 20 days, but for don't forget that the institutional investor will look more of 50 days moving average and 200 days moving average. But for us that invest data, we don't joke with our words. Our T line is our 8 days moving average exponential. For us to cash for all this, that's why that Fibonacci retracement is very, very key. Are you using 61.8? Are you using 50? You must pay attention to where you want to go in, also want to go out. Entering the trade at the right time is very, very important. You must confirm your entrance before you jump in, because since trade is in that trade, since you enter trade in a direction of what of original trend, where you see the main trend, that is where, and also with your support and resistance, you can also manage your risk very well. Always define your clear stop loss whenever, and those that have followed us in invest data, we don't joke with stop loss, because that is part of what strategy used to work to protect your capital, because your investable capital is very, very key. So that you know the right time, so that you will not lose your capital in investment. Always define a clear stop loss that will help you work to limit potential losses if you trade against the trend. Always, it's very, very important that we echo it, so that everyone will understand what we mean by playing trading what pullback. Pullback is very, very important. It can be a short-term decline or a pause in the stock, an uptrend. And what we look at the general direction, and this also creates opportunity for you to buy. That's why when I saw the pullback, I said it's a coincidence. If you remember at the beginning of the class, it's a coincidence that yes, everything will soon go away. And don't forget that there's always noise in the market. For those that are fearful with jumping now, for those that are really that understand the market, I say investment knowledge is very, very important. And that's also I continue to invite you any platform webinar. Come and join experts that will be discussing different topics in different days and at different times. Especially as Invest 2026 is coming up on December 6, 2025. I want you to mark out that date and also plan ahead of it. We'll be looking at different windows of investment, or different investment window, anyone you want to call it, for you to be able to know where to put your money, and also how can you manage the risk in the market. We are seeing other derivative coming up. The ETF is a place to be. The fixed income market. All these are where to be. And also the OTC, what is happening in the OTC market. Also what is happening in property market. What is happening in commodity market. You need to have an idea of all this, so that you can diversify your portfolio. That when such things happen, you know that your portfolio is safe. And that's why if you're looking at an international market today, I'll tell you that Bitcoin has gone below $100,000, because of what people are moving from one investment window to the other, looking for where they can place it, where also they can maximize return. I look forward to see you in the coming Invest 2026 come December 6 by God grace. We'll sit up on Friday by God grace. On this note, I'll say thank you that the market pulling back is not panicking, but rather take advantage of them to buy into value. And I see that yes, any moment from now, once the government come out with a clear communication, what they are doing and the direction they are taking, and also the diplomacy between Nigeria and US also able to tighten it. But I believe that Trump is not going to fight war in Nigeria. He's not going to kill the economy. If there any move, it will be those that are terrorizing Nigeria. I believe that if they were not coming direct to our country to come and fight, we'll have military, we'll have president, we'll have government, they will always react. And also other world power can also look the war of Nigeria, so that yes, all this internal insecurity also will address. For me, there's no cause for now. All you that take advantage of this coincidence to buy into value at the end of the day. Thank you, and see you on Friday. Bye.